Recording, and I am giving it off to Neil to go ahead and start our webinar today on best practices for record keeping. Neil, the floor is yours.
Okay, thank you. Can you hear me and can you see the screen?
Yes, sir.
Okay, so welcome everybody. And again, we apologize for not having the right link. And fortunately, all you guys had the right link. So today we're going to talk about the best practices for record keeping for a business. It's a great hour to spend for a startup business or for an ongoing business or for a business that's growing. Records are extremely important. This is who I am. So I'm a CPA. I work part-time for the Small Business Development Center at Florida Gulf Coast University over in Fort Myers on the west coast of Florida. I have a pharmacy degree from the Ohio State University also. So I owned a chain of drugstores in my younger years. I'm also a MBA and a CVA, and a CVA is somebody who is certified to value businesses. This is what I do for the FGCU and the SBDC. I provide no cost consulting in the areas of that you see there: cash management, exit planning, financial statement evaluation. Our goal here is to help small businesses start, operate, and grow, and we do it at no cost. There is absolutely no cost. Why? Because we're partnered with the SBA, and the Small Business Administration is the one that makes this possible for you to get no cost consulting. We're all over the country. So wherever you are in the state of Florida, we have a location. And as all you have to do is just go to the SBDC website and you'll find the location that you want. And they're all at no cost. It's a freebie. So these are things that we do at the SBDC. We're a national organization sponsored and supported by the SBA in most part, the Small Business Administration. And this is a little bit more. Okay, so let's get into the webinar. Best practices record keeping. Who does the work? Is it an accountant or is it a bookkeeper? So let's look at this. Every business needs a bookkeeper, and every business, in my opinion, needs an accountant. Why? Because they have different roles. The bookkeepers are absolutely necessary from the standpoint of getting your records in order. They are transactional. They are the people that work with the software, whether it be Excel or whether it be QuickBooks or whether it be something else. They actually understand how to input the data. They're not necessarily experts about where to input the data because they're not tax experts nor accounting experts. They are experts in inputting data in the places in which they are told to put it into, and they understand some of the rules of accounting, but they're not accountants. So you need to understand that a bookkeeper has their place in the workplace. And their place is to accurately put the information that you provide them with into your software package so that you can then get accurate and reliable financial statements to see how your work, how you're doing, and what you're doing. There is a definite role for a bookkeeper in every business. The accountant is the CPA. Now, the CPA is an expert and is certified by every state in the United States. Every state has their own means of certifying CPAs. I'm certified in the state of Florida and in the state of Ohio. In every state, you got to become certified. We are experts in the area of tax law and tax preparation, accounting rules and regulations, financial accounting and tax advice, and budgeting, analysis, and decision-making of businesses. We are trained to do that from the standpoint of education. CPAs have to go through 5 years of college before they can even sit for the CPA exam. And there is a role for a CPA. Most accountants that call themselves accountants are CPAs, there are many tax preparers that are not CPAs. And tax preparers just prepare taxes. They're allowed to prepare taxes. There's no license to prepare taxes. So you need to understand that there is a demarcation and a difference between a bookkeeper and an accountant. Of course, an accountant's going to cost you a lot more money. And the reality is that accountant is used for a different purpose than inputting data into the software. That's the bookkeeper's responsibility. They both are needed. They both are needed. If you can't afford them because you're a startup company or you're a small business and you just haven't developed the revenue yet to do it, then you need to make a decision of who's going to input the data and who's going to give you tax and business advice, because you need both. You need both. And those are trade-offs that you're going to have to decide on what to do. So why do we keep records? Well, we keep records to monitor the progress of our business. We keep it so that we can do accurate budgeting, to prepare financial statements, and to track all of our revenue and our expenses and deductions to prepare our taxes. And of course, it supports the items that we put on our tax return. These are reasons why we prepare taxes, and we're going to talk about all of them. Let's talk about the value of business records first. Okay. We keep business records because we need to know what's going on in our business. Number one, how much people owe us. If you didn't have business records, you wouldn't know how much people owe you. You wouldn't be able to understand your accounts receivable. You know, back in the old days, which is probably before many of you were born, in my drugstores, we used to keep accounts receivable and business records on 3x5 index cards. We're talking back in the 60s and the 1970s. Why? Because we didn't have computers. So we had index cards. We had ledger papers. It's very difficult, but we had to do it. Otherwise, we wouldn't know who owed us money, how much they owed us, and we wouldn't know who we owe money to. These are reasons why we need to keep records, and they need to be accurate. We run today through our software packages, we run what we call AP reports. The AP reports tell us how much of our bills that we owe our vendors and how much we are delinquent and how much we're not delinquent and how much we actually owe them. Same thing, we run uncollected accounts receivable. We run reports for that information. If your data in your computer system or in your software is not accurate, you wouldn't be able to make good business decisions on how to collect your money or who to pay. We run reports on inventory. Inventory is a very, very important aspect of keeping good records. How much inventory costs us, how long it sits on our racks or our shelves, and how much how much is it sold for, and the profit that we're making. All that is detrimental in understanding our business. And if the records aren't accurate, we can't make good business decisions. If we're a service company, what's our billable rates? What's our productivity? How much are we paying our salespeople is in relationship to the amount of revenue that they're bringing in. All these metrics are extremely important to be able to understand whether we're running our business effectively and efficiently. And we can't be able to do that if we don't have accurate business records. What's our overhead cost? What's it cost you to run your business outside of your employees? What's it cost you in rent and marketing and utilities? That's overhead costs.
Can't hear.
Neil, you muted yourself.
Thank you for that. Yeah, Neil, we still cannot hear you.
Muted. Okay,
Oh,
now
there
I'm
you go.
unmuted.
Okay. You're
Yeah,
unmuted. We
yeah,
can
yeah.
hear you now.
Okay, let me, somehow or another it got muted. I didn't consciously do it. So where do we leave off?
What's that?
Who's a hard drug user and mentally ill.
Oh,
Can we see my screen again? Hello?
Yes, we can. Please, yes,
Oh.
yes, we can. I'm gonna ask everyone to please mute themselves. Ted, I need you to mute yourself. We're hearing a lot of.
right.
It's hard to find each one of you and mute you guys. Thank you so much.
Did we leave off at this slide when I got muted?
Yes, you were talking about overhead and costs. That's the last thing that I heard.
Okay, great. Okay, so we have overhead and cost that we have to understand. Good records can tell us how much it's costing us to run our business other than our cost of goods sold and our labor cost and our salespeople. How much is it costing us for rent, utilities, and all the other things that we pay to stay in business? It's important because that overhead cost has to be calculated into our cost of the services that we're providing, the hourly rate that we're providing to the client. It's not just the hourly rate, but we have to add the overhead cost and then a markup on that so that we can make a profit. If we don't have the good records on that, we are not able to make good decisions. We could think that we are making a profit. For example, if you take a 40% markup on your labor cost, how do you know that's covering all your overhead costs and a profit? Just because your friends are doing it, other people in the industry are doing it, the records will tell us what is the right markup to take. Assets. What's important on assets? Well, we have to pay personal property taxes on our assets. We get to depreciate them on our tax return. So consequently, you need a good record of all your assets. That has to be a part of your good practices of record keeping. Liabilities. How much money do you owe? The reason we need to keep good records of what you owe is that you need to also put this information on your tax return. You also need to have those records on your financial statement, on your balance sheet, when you want to go in and borrow money. All this information is very valuable, and the only way you can get it is if you do have good record keeping. Other reasons for keeping records in general: legal compliance, contracts, leases, licenses, insurance, permits, litigation, organizational documents are required for these things. Who knows when you're going to get into a litigation problem? Who knows when you're going to have an insurance claim like we had on the West Coast here? Ian hurricane just occurred, as you are all aware of. We need to have good records so that we can make claims for everything that we lost whenever we have a disaster. Your insurance claims, they want to know what you lost. How do you know what you lost if you don't have good records? Also, in the area of insurance, it's very important that you have pictures, pre versus post. It's important that you update the pictures of all your assets, your properties, and everything that you have. You have to prove the value for insurance purposes. And of course, for tax compliance, which we'll talk about throughout this webinar. So what kind of record keeping should you use? Well, it really doesn't matter as long as the records are good. Now, if you're a startup company and you don't have a lot of money yet, a lot of people use Excel. Handwritten receipts are great. Deposits and outflow of expenses are very important. So what do? Sometimes we use Excel, but the most important thing is that we keep our receipts. You see, when you get audited by the IRS, they don't want to see your QuickBooks or your Soho or your Zorro or your Excel spreadsheet. They want to see your receipts. And without your receipts, you don't have the documentation. You don't have the documentation. So you can use a spreadsheet, you can use a business checkbooks, you can use accounting software, but you've got to keep receipts of the deposits that came in and why, and the cash flow that goes out and your expenses, and why you spend that money. And we'll talk about a little bit about that, of the different types of expenses and the different types of record keeping that's required by the IRS. So the reality is you can do paperwork or you can do digital work. The burden is always on your shoulders. You have to show proof. The IRS does not have to show proof of anything. You have to show proof that this was a legitimate business expense. You have to show proof to the insurance company that you had an asset and what the value was. And you need the good records so that you can run your business. Paper or digital doesn't matter. So let's look at how we keep records. A checkbook is a main source of transactions. That's all it is. It's not, it is not a supporting document. A checkbook is just a list of your transactions. It is not your supporting documents. You need those supporting documents so that you can prove, because you have the burden of proof, that the expense that you are charging off on your tax return and the expense that you're charging off to your insurance company is actually the expense that is a legitimate expense. Electronic record keeping, it's good for as long as they are material to the law, and we'll talk about that in a minute. According to the IRS, and I have a slide on this, if you are doing digital record keeping, they have to be in an approved IRS storage Dropbox. They must be indexed, they must be stored, they must be preserved, and they must be retrievable and be able to be reproduced as the receipt or the record that we have. Now, we'll get into that in another slide also in detail. Okay. So this is just a summary that you can do a simple record keeping using paper and pencil. You can do a spreadsheet using Google Docs or Excel, or you can buy software. And some of the software is free, I understand. I understand web apps is free. I would say that 99% of my clients use QuickBooks, and they're now moving into probably 85 to 90% of them are using QuickBooks Online. And we'll talk about how you deal with the supporting documentation there. So this came directly off of the IRS website. The IRS website says that you must provide a complete and accurate record of your data that is accessible to the IRS. That's number one. You have to provide original hard copies, and they may be stored electronically, but you've got to be able to access them. And they must be stored on an electronic system that has been tested, that the hard copies have been reproduced in compliance with the IRS requirements. So you're going to ask me, what are those requirements? And I would say go to the IRS website, because they're too long to even put on a list here. But I would also confirm with wherever you're storing your electronic documents that they are an approved IRS site. Now, I store my documents on QuickBooks, and I'll show you how in a minute. The IRS may test your electronic storage system to see if it qualifies. They have the right to do all this. So if you're storing all your documents on Google Docs, make sure that they are an approved site. If you're doing it on the OneDrive with Microsoft, make sure that they are an approved site. The accuracy of documentation is extremely important, as you already probably figured out from my discussions already. The taxpayer has the burden of proof. You have to keep supporting documents, and employee compensation records have a different rules that you have to follow, because there are rules by the IRS and there are rules by the Department of Labor. And you can get those rules off the Department of Labor, and you can get those rules off of the IRS website. So there are different types of rules for employee records. And this shows that this is the burden of proof. You must be able to prove certain expenses to deduct. That's first of all. You must be able to prove substance in contracts. You must be able to prove substance in payroll records, and you must be able to prove payments to vendors. And your check is not necessarily the proof. Your bank credit card statement is not the proof. You have to understand that. Those are just listings that say that you had a transaction, but they're not proof. You need to have the receipts as proof. You must be able to verify all the deposits and all the receipts with proof. Now, these are different things that we spend money on. These are different ways that we have canceled checks and stuff like that. These are not the proof. These are the documents that we use in transactions. Now, let's talk for a second about travel documents, vehicle documents, and home office documents, because these are very specific with the IRS. So travel document says that you have two ways to deduct travel expenses from your vehicle. You can, number one, just do the mileage that the IRS allows every year, or you can deduct actual expenses. Actual expenses means that you can deduct your fuel, your maintenance, your tires, your checkups, and all your repairs, and your depreciation on that vehicle. The mileage says, sorry, the mileage fee that we're giving you to deduct per mile includes all those, in our opinion, according to the IRS. So you don't have to keep any documents if you are taking the mileage, but if you are going to deduct the individual expenses, you need to keep the receipts and the documents, not just the canceled checks, not just the credit card receipts, not just the debit receipts. So if we are going to take the mileage on the travel expenses, you need to have a log. You need to have a log of the date, the beginning miles, the ending miles, the reason that you're deducting that, and the total miles that you have gone for that particular trip. That log is the documentation and the support documentation that you're going to put on your tax return to deduct the mileage rate that the IRS is going to give you. Now, there's plenty of software out there to do it for you. I have clients that download an app on their telephone that costs them somewhere around $10 a month, and that software then exports to Excel. And I'm sure you can find it out on the internet. Travel documents. Let's talk about travel documents. When you are traveling, you are permitted to deduct the mileage that you're traveling and the accommodation or the lodging cost and the food cost. The issue is that if you're not traveling out of town, the food cost is not tax deductible. The food cost is not tax deductible. So if you stop at a restaurant in between clients or going somewhere within the geographic area of where you do business, the food cost is not tax deductible. If we look at a home office deduction, a home office deduction is great, but there's all kinds of limitations in it. And there are different limitations if you're a sole proprietor versus a partnership versus an S corporation. So you need to get with your CPA and your tax advisor to understand whether or not you can deduct a home office, or whether or not how you should deduct it, whether you could or whether you should. And if you could and you should, how you're going to deduct it. Because just like travel expenses, the deduction for a home office can be done one of two ways. It can be done the easy way, just like the automobile expense can be deducted the easy way, which is typically taking the cents per mile. Well, the IRS is allowing you to do the easy way on on a home office by taking X number of dollars for a maximum of 1,500 square feet. Okay? So they're allowing you to deduct the home office, not keeping any records, by taking $5 a square foot times, 300 square feet. $5 a square foot times 300 square feet of a maximum of $1,500. So they're going to give you, if you're eligible to do a home office expense, they're going to say to you, hey, if you don't want to keep a record of your home mortgage interest, your utility bill, and all that kind of stuff, or your rent at an apartment or a condo, we'll give you $5 a square foot times up to a maximum of 300 square feet for a home office expense on your tax return. No records required. No records required. You say, just like the automobile simple way. If you want to do it the tough way, then you've got to keep all the documentation and split the bill based upon the ratio of space that your home office takes up versus space of the rest of your house. Canceled checks, purchase orders, licenses, accident reports, all these expenses that you're going to deduct require you to have support documentation. I'm going to stop here for a second in case you have any questions.
Okay, let me check. I do not have any questions right now, Neil, in the chat. I have
Okay, well-
somebody's hand raised. I don't know. Let me
Why don't
see
we
if
wait
they.
for the hand? Why don't we wait for the hand until I finish, and
Okay.
then we can take questions and answers at the end of it.
Excellent. Sounds like a plan.
Okay, so
Excellent.
let's move on. Okay, what are support documents to continue? Okay, cash register receipts, those are support documents. Bank deposit slips, those are support documents. Receipt books, invoices, credit card charge slips. Keep in mind, that doesn't say the credit card statement. Credit card charge slips. And of course, we need to write on that credit card charge slip why we bought that product. For example, let's say I go to Walmart and I spend $50 and their office supplies. We need to write on it that they're office supplies, because I could go to Walmart and buy groceries, candy, I could buy all kinds of stuff. I can buy hair grooming stuff, I can buy prescriptions. The reality is we need to be able to document why we purchased that and why we treated it as a business expense. The credit card statements are not good without the source documents. We need to have the forms 1099, NECs, and the MISs. That's for independent contractors. We need to have those forms submitted to the IRS, the Social Security Department, and also to the vendor that we're using. Timesheets and W-2s, those are support documents. Inventory, documents supporting the cost of inventory. We have canceled checks, we have cash register tape receipts, again, credit card slips, invoices, purchase orders. And for all expenses, we need the same thing as above. We need to see why we spent the expense and the documentation for it. Keep in mind, and I repeat this over and over again, your credit card statement is not a support document. It's simply a record of the transactions in which you did. Your checkbook is not a support document. It's strictly a record of the transactions in which you completed. So we need support documents behind that. Assets. The support documentation of an asset is a documentation of when and how you acquired the assets. There has to be a contract when you buy an asset. There has to be a purchase agreement when you buy an asset. The purchase price, the cost of any improvements to it. If you do improvements to that asset, for example, real property, if you own a condo personally or in your business, if you own a condo, you do improvements, there have to have bills for the improvements, deductions taken for depreciation. The deductions taken for depreciation are dependent upon how much you paid for that particular asset, whether it be a piece of equipment, furniture, or real property. Again, you have a receipt, you have a contract, how the asset was used. Was it used for business purposes, or did you buy it for your business and then took it home and used it for your personal use? What's the selling price in the event that you sold the asset? Again, you have to have a receipt from the sale. In addition, you had to deposit a check or some way, some means of getting the money. And then you had to have expenses of the sale. So sometimes we have a broker that we go through. Sometimes we have other expenses like filing fees and stamp documents. All that we have records of. The point being made is that you have to keep that as documentation for the asset in which you are deducting depreciation and an expense on your tax return, and if you need to file an insurance claim. Because if you file an insurance claim because it was that asset was lost or ruined or destroyed due to a disaster, they will need all that information. And these are the different documents that would actually be used for documentation for the asset in which you purchased. So how long does the IRS require you to keep documentation? Well, here's the caveat. The IRS always has a way out. So they have rules, but then they have exceptions to the rules. So in every law, in every code, there are rules, but in every code, there's exceptions to the rules. And that gives them a way out to say, okay, this is the rule because Congress sets the law, but then we're going to hopefully have some exceptions to the rules, and then they develop some exceptions. So the typical rule is that all records have to be kept, all tax return records have to be kept for 3 years. 3 years. Whether they're kept digitally or on paper, they have to be kept for 3 years after you file them. Now, there are 3 exceptions to this rule. The first exception is if the IRS has some type of doubt that you haven't reported all your income, and they have done some research and have some documentation, because some of your vendors and some of your customers are going to report what they paid you to the IRS. For example, all credit card companies now are required to report what they paid you that was charged through their credit card system to the IRS. They have to report that. And in fact, you'll get a copy of that. So the IRS has some idea of your credit card income, and they have statistics of how much cash income you probably took in, and they have other information. If they believe that you underreported income by at least 25%, they can go back 6 years on your tax returns. They can go back 6 years on your tax returns. So if you only kept 3 years of documentation and support information for 3 years, now you have a problem. Now you have a problem. If they believe that you filed fraudulent information on your tax return, and of course they have ways to figure out whether they believe it was fraudulent, they can go back unlimited. There's no time limit. So people that tell you that you only have to keep your records for 3 years, they're not really telling you the whole story. This is the whole story. And the reality is, you can ask me, how long should I keep my records? Well, I keep my records indefinitely. I keep all my clients' records indefinitely, but I digitalize them. And the reality is, yes, it costs me space to digitalize, to have them digitalized. But again, I have a level of comfort that I have to have. You will have your level of comfort. Your CPA will have their level of comfort. But I know that at any one time, and it did happen to me, that something like about 10 years ago, no, not 10 years ago. It happened about 4 years ago. But I had the IRS that was fraudulently investigating one of my clients for fraud, for income tax fraud. So this was a criminal investigation that the IRS Criminal Division was investigating one of my clients, and the IRS wanted me to send them all of the documentation that I did their tax return for, going back from day one. All of the support material that I had that the client sent me to be able to do their tax return, I had to scan it in, and I had to UPS it to the IRS Criminal Division. Now, if I didn't have that documentation, I'm not sure I had other alternatives. And it wasn't even me. I was the CPA that did the tax return. The reality was I had the information because I'm kind of oversensitive to understanding these issues. And so I make sure that I throw nothing and shred nothing away. And so I digitalize everything, and then I will have those documents. Keep in mind, there are 3 exceptions to the 3-year rule. And the other exception is that an amended return, they can go back another 3 years or 2 years after that tax was paid. So if you amend your return, they now have another 3 years that they can go back, the IRS. Very, very interesting. Don't listen to your friends and neighbors about how long you need to keep your tax returns. These are the rules. And you can get these same rules on the IRS website. Now, let's talk about employment taxes. You have to keep employment records for a minimum of 4 years. 4 years. That includes 4 years from the day you last filed your quarterly 941. You have to keep the amount and dates of the wages, the amounts of the tips, the data on every employee, the W-2s, the dates of employment, and the records of employee tax filings. Now, I know for a record that most payroll companies like Paycheck, ADP, most of the national payroll companies, they typically keep records for 7 years. I know that the banks that I do business with keep all of my bank statements for 7 years online so that I can access them. But those aren't the documentation support that you need. Those are just the transactions that occurred for 7 years. The IRS requires that you keep this documentation, and they also require that you keep a separate folder for every employee and all the documentation for that employee in a separate folder, whether it be a digital folder or a manila folder locked up in a cabinet. They require that you keep all these records in a separate file for each employee. And here's the bullet point on that. They maintain in separate personal files all pre-employment information, all I-9 forms for 3 years from date of hire, 1 year after they terminate. Benefit plans 6 years after termination. So if you provide health insurance, if you provide retirement program planning for a client or for a customer, for an employee, you got to keep these for more than 4 years. Health and safety records, copy of government IDs, like their driver's license or passport, job history compensation for 4 years after termination. After termination. All these are requirements of the Department of Labor. And remember I said earlier, which you might have forgotten or you might have dozed off on it, is that with employment records, you have 2 agencies that you have to worry about, and that's the IRS and the Department of Labor. So, in summary, let's look at the different areas and why we may need support documentation. Tax returns, you need them for the 3 years, a minimum of 3 years, but we know that there's exceptions because I've already talked about it. Employment records, a minimum of 4 years, but again, we know that there's exceptions. And then for non-tax purposes, we have insurance records, insurance claims, creditors, and also for financial purposes. We need to be able to keep records. These are the different agencies that when you get the file, the video on this, you can download and go to these different websites. These are different agencies within the federal government in the state of Florida that you can go to and get advice on their website about how long you have to keep records and what type of records you need to keep. Also, we need to never forget about our city and our county, because they also have rules and regulations. They have permits that you have to get to do business. And the different types of permits are relevant for different types of businesses and different types of industries. So we need to make sure that we abide by all the rules and regulations. These are the important websites, the links that I put up here. Keep in mind that being in business is not easy, but staying in business is even harder. And what we want to make sure is that we don't get run out of business because we were deficient in record keeping and an agency put us out of business. Let's talk about this disaster that we're dealing with down here on the west coast of Florida, Ian. If you don't have good records, I don't know how you're going to collect money from anybody. Even the SBA is willing to give you up to $2 million to get your business back up. But if you don't have good records, I don't know how you're going to be able to get that money, because they do require good records to document what you have and what you lost. And the same thing with the insurance companies. In this disaster, if you don't have good records, I don't know how you're going to get all of the money that you do. And FEMA is willing to come in and help you out, but they want documentation also. Records. Yeah.
Yeah, and that's such a great point, Neil. And I just wanted to mention that, some of the issues that the idle, some of the issues that I had with businesses that I was trying to assist was that they hadn't filed their taxes timely, or then later they went back to make an amendment. And so not having that paperwork really didn't allow for some of these businesses to get the assistance that they needed. So I just wanted to share that. That's a very good point.
Well, I am working with the SBA, and the our SBDC is working with the SBA and with the FEMA people at our what we call business rescue centers down here in Southwest Florida. And the state of Florida has a great loan out there. It's a 0% financing for 1 year for up to $50,000. $50,000. And I'm working with clients to be able to get that $50,000. But if you don't have a balance sheet to show that your liabilities, and if you don't have tax returns to upload into it, you're not going to get the money. And the same thing, I'm working with people on the idle loans, the emergency disaster loans, injury loans that the SBA is offering. I'm not actually filling out those loans, but the SBA has experts at the centers to help you fill out those loans. But they require 3 years worth of tax returns. They require not only your business tax return, but they require 3 years of your personal tax returns. They also require your liabilities. So you need a balance sheet that has all of your liabilities on it, and they're going to want documentation to that. So in the first run of this particular application that you're going to fill out for the idle loan is going to get you a underwriter that's going to look at it and then contact you for more information. And if you don't have that documentation and that support information, it may prevent you from getting the amount of money that you're entitled to. And the same thing with FEMA. FEMA, there was an article in the Naples newspaper yesterday that says FEMA has been denying a lot of applicants. And you need to go back to the FEMA centers, which we have set up here with the SBA and with the SBDC, and appeal that because you haven't supplied the proper documentation to them. So it's so important that you can't do it after the fact. You have to be proactive, as Ali said. So record keeping summary, we need it because it helps us. It helps us in our business decision. It helps identify where we're spending our money, where we're getting our money. It helps prevent omissions for deductions on our tax return. It helps to establish where your income is coming from and how you're getting it. When you're in a business today, it's important that you know which customers are profitable, which products are profitable, and which areas of the business you should be focusing on versus which areas you're not doing so well or losing money on. Only your records can tell you that. And it helps explain the items on your income tax return. So starting and running and growing a business is difficult. It involves understanding of legal matters, tax matters, the requirements of being a business. It requires understanding of good business practices and good record keeping. It also requires an understanding of all business practices. It's not easy, but you want to make sure that you're not run out of business because you don't have good records. And who can run you out of business easier than the federal government? So part of doing, and the state government, and involving in the state government is the workers' compensation, is the reemployment department of the state of Florida. Reemployment really means unemployment. So the reality is part of doing business is turn record keeping into a habit. That's what I believe. Turn record keeping into a habit. And I think I talked enough. So why don't we open this up for discussion?
Thank you so much for all that information, Neil. I think that was great. I don't see any questions in the chat.
I
That's
see
an
Valerie has her hand
excellent
up.
reply. Excellent seminar. Thank you.
You're welcome.
Thank you guys for that.
Very clear and succinct.
Yeah, so a couple of you have asked a question in the chat, so I just want to go ahead and say it. What I do is that I record the presentation, and everybody that registered for the presentation will get a copy of this recording. Okay, so that way you guys can rewatch it and focus in on the slides potentially that you have questions for. I just want to be mindful of everyone's time. I know that we started a little bit late. Again, I apologize. It's 12:04. I'm going to go ahead and call on Valerie because her hand is raised. Go ahead, Valerie.
Thank you. Thanks, Neil. That was excellent. I just wondered, do you take clients directly or?
Well, what was the question? I take what directly?
Do you take clients on at this time?
Yes, Neil does.
Yes.
He does. Neil, maybe you can add it on the chat or maybe put up a slide that has your contact information. If not, what I'll do is in the email, I will share Neil's contact information. Everyone will be blind copied. Neil will be CC'd on the email, and I'll include all his info.
Yeah, I'm putting up my email address right now.
Thank you
Excellent.
very much. Because as you said, you're quite right. If you don't start out with a good accounting process, it can really damage your business no matter how good the idea is.
There is my FGCU contact information. I work part-time for the Small Business Development Center. I also have my own CPA practice. But this is, if I work with you through the FGCU, it is a no cost to you, and we can work together to help you in any area of your business. If you want to work with me through the SBDC, you'll send me an email. I will send you a link of the SBDC to register as a client as the SBDC. Once I get notification you've registered, I then have the right to work with you at no cost.
Thank you so much for that.
Mm-hmm.
Excellent. Seeing that I have no other hands raised, someone posed a question about the idle loan being obligated but not yet approved. I would tell them to go ahead and send me an email. I'll put my email in the chat so that I can ask our disaster team. They're the ones that handle that information for us and see if we can get you an answer. Otherwise, you should be calling that 800 number as well, which I will share with you. I'm going to go ahead and then stop the recording. And I think if no one has any other questions, we can go ahead and end the presentation. Thank you again so much, Neil. A lot of the comments, great presentation, great information. And I'm just very grateful to have you as part of the SBA team.
Let me say one thing I forgot to say during the presentation. You know, when I end these presentations, I'll dream about the stuff I should have said. But there's one important thing. QuickBooks. QuickBooks has a means of attaching the actual support document to the transaction. And QuickBooks Online does it, and QuickBooks Desktop does it. So all you have to do is take a picture of it with your telephone if you have the online version, and you can attach that. There's a paper clip on the transaction in QuickBooks Online that you can then have the support documentation for that transaction right in your QuickBooks, and then you can shred the piece of paper, and whenever anybody wants to know why you spent that money, the receipt's right there. In the desktop version, you have to scan it in and then attach it to the particular transaction. And that's how I do it for my own personal business. I just scan it in and I attach it to every transaction, and I have all my support documentation attached to every transaction in QuickBooks. And that gives me the satisfaction that I can go back year after year after year and say, why did I spend this money, and not have to look for the record? I just go to the transaction in QuickBooks, click on the attachment, and there's the actual receipt.
Thank you so much, Neil, for that. And again, thank you to all the business owners that joined us today. Thank you again to Neil. And I guess until next time, we have an upcoming webinar. I want to say it's December 6th. I'll also share that link with all you in case you guys can also join us then.
Yeah.
Hope you guys
And
have
I
a
think
great
that
rest
has,
of your week.
yeah, and I think that has to do with getting ready for taxes.
That's correct. Getting ready for taxes.
Okay.
So join us then. Thanks so much,
Have a
Neil. I'll
good week.
share that contact. You too. Bye-bye.
Thank you.